Well, as we heard before already from Luxembourg, substance is a very important term, and it has become quite an important term coming, well, quite a bit out of Luxembourg, because the European Union, where Luxembourg has quite a few offices from the European Union, they were getting upset because Starbucks, Costa Cafe, they made quite nice turnovers, like other Googles and so on as well. Billion-dollar companies made nice turnovers, but they paid relatively little tax or no tax at all, because their offices, their headquarters were somehow on a nice island where they had to pay very little tax or even no tax at all. So there, the European Union had the idea, let's do something, ask that those companies have substance in the form of offices, employees living there, and the management also being at those locations. Then the OECD, the Organization for Economic Cooperation and Development, announced a new global standard on base erosion and profit shifting, which was another push to say, really, we have to stop that profits are done when they are relatively little taxed, so that they try to avoid that it is taxed in no tax jurisdiction. And they also said, well, of course, we cannot only just go for the big ones, we also have to go for everybody. There can't be any discrimination. That means whether it's a large company, whether it's a small company, they need to show some substance. Most countries, or many countries, especially in the offshore field, they answered and reacted and brought up their own standards and said, well, okay, to fulfill substance, according to their jurisdiction, they have to fulfill certain conditions, and that went quite well. At least it was very quick that those jurisdictions reacted and brought up their rules, their laws so that they can continue having the companies from those fields. So they are based on those fields. But nevertheless, when you look at it, you see there is a little bit a problem, because the 3 requirements of a resident entity that undertakes relevant activity to demonstrate economic substance must be directed and managed in the jurisdiction. And it must have some core income generating activities, or SIGA tests, that must be fulfilled, and the adequacy test must be fulfilled. So here the economic substance rule has become the new normal, and as my colleague from Luxembourg has pointed out, this is moving to quite a change in our field, in our field of work, and different jurisdictions can be affected quite a bit, and they need to adapt. So for example, what are the examples of the core income generating activities for headquarter business? Well, the taking relevant management decisions must be made in that jurisdiction. Also, the incurring expenses on behalf of group entities must be adequate, and the group activities must be coordinated from those places. Then another example, for example, distribution and service center, transporting and storing goods must be taking place. Managing stock and taking orders must be done through that. Providing consulting administrative services from all these places. As you can see, this goes quite a bit into details, and you can read that further on later on. Well, what did the United Arab Emirates do? They also had to follow the rules, and they also introduced economic substance rules, but they also stipulated what needs to be done. And this was then done, and all the companies now in the UAE have to follow it, be it companies with local partner who has 51% and foreigners up to 49%, free zone companies where foreigners can own 100% of the companies, or also offshore entities or special purpose vehicle companies need to fulfill these requirements. So just holding a license and not having activities is a day's only going out of the field of requirements. Well, here you see the 9 different fields for these regulations: banking, insurance, fund management, lease finance, headquarters, shipping, holding company, intellectual property, and distribution. Well, I guess many who are participating in this conference now They can focus on a few of those which we have listed here. Most probably holding company. I can imagine that quite a few of you have holding companies, and distribution and service centers are most probably also for you quite of importance. So how do they satisfy the economic substance requirements in relation to such a relevant activity? Well, they must conduct the relevant core income generating activities in the UAE, in that certain countries where the company is associated. And it must also be directed and managed in the UAE. That is also a requirement. And for all of those who have been in the UAE, you know, this is not too difficult to comply with, because in the UAE, it is absolutely open to receive foreigners. It's impressive, but it's true, 90% of the population in the UAE are foreigners. The locals are only 10%. So for 500,000 people, more foreigners, it's not an issue. They are receiving the people. And up to now, we have nearly between something like 9 to 10 million people living in the UAE. So receiving people from whatever country doesn't make, is not a problem. They can be from Kazakhstan, they can be from Russian-speaking countries in general, they can be from South Africa, from Latin America, wherever they're all welcome. And then they need to have this staff here, so this is problem without any problem possible. They have office space here. In the last 15 or 20 years, a lot of office space has been created in the UAE. At the moment, also we have to notice they even have perhaps oversupplied a bit. There are quite a few offices empty. Prices have gone down for real estate, so this is a great opportunity. If somebody thinks, yeah, we need to have this adequate physical asset in the UAE, we need to have office space, well, here you are definitely welcome to have a great choice where you can choose it from. Now, the great issue, the great problem is that such companies, if you are stuck in a certain country, what do you do? If you cannot fulfill the requirements, as my colleague has also mentioned, if you are in an island in the Caribbean or somewhere in the Pacific, and it's just not possible to increase the employment, to have more employees there, and it's perhaps not the ideal infrastructure for international people to live for a long time. Perhaps they don't have the schooling for the kids, for international people. Now, what can they do? Well, since now a few years, it's possible to migrate companies. Migrate companies is a great thing. Today, we not only see migrating people from one country to another, now it's also possible to migrate companies. You can migrate companies from one country, from one jurisdiction to another. And here we see great advantages, what we have seen with Luxembourg, but of course as well with the UAE, because in the UAE, they are open to receive anybody like me and like 9 million other people. They're all foreigners here and living quite happily. So you can migrate the company. This requires that on the other side, the country where the company currently is open, that companies can move away. So you need to get the permission that companies can move. And we have done quite a few transfers from Caribbean islands, from Indian Ocean countries, and from Pacific countries to the UAE. And in the UAE, you have quite a big selection where you can allocate, where you could go to have your office and you have your employees. A main thing also, main advantage of the migration is the bank accounts remain. To open bank accounts, most of you, I guess most of you have known or know every day. It's very difficult to open bank accounts in whatever country it is. It's not that easy as it was perhaps in the last century. And also important that contracts remain. So if you transfer a company, you don't have to start with a new company, you have to make new contracts. No, the old contracts remain, just the address changes and would be then in the UAE. So UAE has a very excellent infrastructure, better reputation. Well, we do think the UAE has improved on their reputation quite a bit. Everybody is welcome, as I just mentioned, and of course, very important, there is no tax. well, perhaps I'm exaggerating a little bit. There is a tax that means withholding tax of, no, value added tax of 5%, which of course is rather on the lower end. And then we have also international financial centers, like the Dubai International Financial Center and the Abu Dhabi Global Market. So there it is possible to accommodate financial international companies which are managing funds. The funds can remain in the other jurisdiction because they are not required to have substance. But the investment manager could, for example, move to Dubai or Abu Dhabi. That means the company can move. Then, of course, also the management should be here. And that is also an interesting part. Perhaps at the first thing, oh, I am the manager, perhaps lives in London, in US, in Singapore or Zurich, receives perhaps a salary of $200,000 to $500,000 as investment manager of a fund. And by moving to the UAE, they have now the possibility to go and be in a country where there's no tax. So instead of paying perhaps 65, 50 or 60% of tax in London, they pay no tax in UAE on their salary. And the company also doesn't pay any tax. And it's very ideal. There are more than 200 private schools here for all major curriculums. So whether you speak French, Russian, Indian, Filipino, for all these nationalities, you have schools which are welcoming all these people. We have the International Baccalaureate, so all these possibilities are here. And most probably, some of you also have used already the excellent airlines which are offered by this country, like Emirates or Etihad, and shopping facilities. Well, I can imagine that some of you also have experienced the practicability of all what you can buy in these places. Well, when I speak of migration of companies, many people think, well, migrating from one country to the other. But in the UAE, it's also possible to migrate from an offshore play. I mean, if you have an offshore company in Jebel Ali or in Ras Al Khaimah, you could upgrade it to become a real company with offices, with employees, become a free zone company, and having offices so that they really can show to other countries by receiving a tax resident certificate that everything is fine. Also, when I talk about tax resident certificate, and this is international now more and more a requirement to show that you fulfill the substance requirements. We have quite an interesting experience recently. In one of the free zone, we had an office for a client. It was only a flexi desk, not a real office, a flexi desk. We fulfilled the requirements for substance according to the UAE rules. But this company was connected to a company in France. And France then said, well, that's good that you fulfill the substance requirements of the UAE, but you also have to fulfill it in France if you want to do business with France. So that shows the big problem which perhaps some offshore jurisdictions will have by migrating or by keeping the companies there, by having some employees which is working perhaps for 10 or 20 different companies, by not having real offices in the name of that company and nobody else. That might be a problem, and therefore it might perhaps be better to move them to the UAE, a country with zero tax and where it's possible to fully repatriate the capital and profit. And very important, it has tax treaties with over 80 countries, which is quite interesting. Although the country itself doesn't have the tax, with the exception for international banks and oil companies. So these tax treaties can be widely used also for the free zone companies, for local companies in general. So to summarize it, I do think, as my colleague from Luxembourg has said, there are plenty of possibilities. It's a new century, new possibilities. And we see that migrating companies can perhaps be, for some of you, also something to consider, to think and see whether it would make sense to migrate to one of the lovely places. And what we see here in the UAE, it is open to receive anybody, so it makes it quite comfortable for everybody. For Lux non-regulated funds, I just received a question here. Are there any substance requirements and SIGA for Luxembourg non-regulated funds? Whether we need to have a Lux fund manager and other employees in Luxembourg? Do you aware of any examples of adequate substance for such non-regulated funds? Well, if you would move them, of course, for Dubai, then we can fulfill it. But then afterwards, I will leave my colleague from Luxembourg to answer it, and I'm sure he has an answer. Then a question also came up concerning, where is it? Does the UAE make efforts to comply with the FATF? Does this concern free zones? Well, the UAE tries everything to follow international rules concerning compliance and anti-money laundering requirements to fulfill the international rules. This is very important to avoid to get onto any blacklist or gray list, to keep the good reputation and to receive clients. So there is no shortcut in the UAE. There's no way to say, well, Switzerland, Singapore, US is too difficult for me, I'd rather go to the UAE. Well, for these requirements, it's exactly the same, and you have to fulfill that as anybody else would do. So this is clearly the case for everybody.